Assalamu alaikum everyone. Hope you guys are doing well. Today's video is about it's a question from 7110, and at that time the examiners would give you questions of income statement and statement of financial position for a sole trader with adjustments, and this was a full length question. So it was a 40-mark question previously, but right now when the course code for O levels accounting changed to 7707, they've stopped giving you a 40-mark question, but still, income statement is very relevant, income statement with adjustments, and even statement of financial position. You should be very, very good at the format of the statement of financial position as well, because they can still ask you to make an extract from a statement of financial position. So you should be very, very much aware of all the sections of the statement of financial position. So one interesting thing I need to say here, that there's a formats ebook that I have written, and it's for free. So if you guys are interested, you can always sign up for your free formats ebook, and I'll send it to you through WhatsApp. So you can sign up on the link below in the description. Okay, I'll read this question here. Feng is a sole trader. The following balances were extracted from the books on 30th September 2019. Their year end is 30th September 2019. That means their year starting is 1st October 2018. That's their start. That's their year start. Then they are saying, okay, they've given you so many balances here, and they've given you basically this is a list of balances. It's not exactly a trial balance because it's not a debit and a credit, but it's just like all the balances together. And the interesting thing here is that when I was a student, I always wanted to be sure of the values that I am taking from the question. So I would actually number both sides. That's a very good way in which you can be very certain what numbers you're taking towards your answer that you're writing. So I'll just number both sides. Yes, so we have 27 values in our trial balance here. It's not exactly a trial balance, it's just a list of balances. And what we need to do is that always, whenever I solve this question, I solve the additional information first, and then I make all the changes over here. So I write all my notes here on the first page of this question, and then I start making in the income statement. So you shouldn't start your income statement unless you are very sure that you have solved all the adjustments correctly, or even if that you should first solve the adjustments and then go on to making the income statement. So here in the additional information, they are saying at 30th September 2019, they have given you additional information. So point number one is on 15th August 2019, that is within the year, goods had been purchased on credit for 1950. The transaction had not been recorded in the books. So it's like an error of omission. We haven't recorded what we purchased. So whenever we purchase goods on credit, our purchases should increase. So purchases will be, I'll just change the color here, purchases will be, so I'll have to add 1950 to my purchases, because my purchases was 135,000, but I have also purchased goods for 1950 which I haven't recorded. Similarly, my trade payables will also increase by 1950, because what is the double entry for the purchases on credit? The double entry is simply purchases debit, trade payables account credit. So you need to record both of the entries in this case. Then point number two is carriage of goods included 2700 for carriage on purchases. So carriage of goods here is how much? We need to see, this is okay, this is value number 11, and that is 9,000. So 9,000 is total carriage on goods. So from this 9,000, carriage inwards, that is carriage on purchases, is 2,700. So I know if 2,700 is carriage on purchases, the remaining is obviously its carriage outwards, 6,300. So this is 6,300, which is carriage outwards, because there's two types of carriage in accounting. One is inwards and the other one is outwards. So whenever we are giving free delivery to our customers, it's like carriage outwards, and that is also the business expense, and it comes in the expenses section of the income statement. So inventory was valued at 35,550. This is my closing inventory, and I know this because they have said here at 30th September 2019. Then they're saying rent receivable 1,500 was due. Rent receivable whenever it's due, so this is value number 15, I'll write here at 1,500. whenever there is an income or there is an expense and it is due, outstanding, owing, accrued, unpaid, all of this is used for owing. So outstanding, what does outstanding mean? So it's like uh, in the case of rent receivable, it's like I have given someone to my tenant a place on rent and that person gives me rent, right? But for example, if I have given that person service of, let's say, in this case it's 16,000. I have given that person service of 16,000, but he or she has only paid me 14,500, which means 1,500 is due. So in that case, when 1,500 is due, I need to also add this in my income, in the income statement, 1,500, because the service that I have given is for 1,600. You need to remember this, that in accounting you need to follow the accruals principle, and the accruals principle says that incomes are recorded when the service is given and expenses are recorded when the service is used up. So we are not interested in how much we are paying for an expense or how much we are receiving for an income. We are actually, in case of incomes, we are interested in how what's the worth of the service that we are providing. So once we've provided the service, it should be part of our income statement, it should be a part of our income. The next point here says the insurance included an annual payment of 800 made on 1st January 2019. So we are making our income statement on 30th September 2019, and we have made an annual payment of 800, means this 800 is for 12 months. So this is for 12 months, and so that means 9 months of these 12 months fall in our year, and remaining 3 months, so 3 divided by 12, that is October, November and December 2019, does not fall in our year because we are making the income statement on 30th September 2019. So if we are making our income statement on 30th September 2019, that means only of this payment that we have made, 9 months we are using, 3 months we are not using. So we should exclude that from our current year's income statement. So 3 divided by 12 multiplied by 800 will give me 200, which is insurance prepaid, which I need to subtract from my insurance here, that is the 14th value here. So I'll write here minus 200. So in my income statement I will write 2,500 as insurance, because 2,700 minus 200 is 2,500. Okay, then they are saying a new, okay, then point number 6, they're saying 750 was owing for water. So again, owing is an owing expense and owing incomes both are always added. Whenever there is an owing, you need to add that, and you need to make that part of your income statement. Whenever there is a prepaid, you need to subtract that and you need to remove that. Doesn't you don't have to put it uh, as part of your income statement. Okay, so the next point here says a new motor vehicle costing 16,000 was purchased on 19th September 2019. So that means that is during the year. Payment was made by check. No entries had been made in the books. So when you are buying new motor vehicle, so you need to add this to the second value here, 16,000 for a new motor vehicle. That means motor vehicles cost will increase because of this. We need to subtract this from our bank value. So the bank value here is 24th and this is 27,450. So you need to subtract 16,000 from 27,450 because you have paid by check and you haven't recorded this in anywhere. So that means you need to record two entries. One is motor vehicle debit, bank credit. Bank will be reduced, motor vehicle will increase. Okay, in the 8th point they're saying depreciation is to be charged on all non-current assets owned at the end of the year as follows. Land costing 60,000 is not depreciated. The buildings are depreciated at 2% per annum on cost. So simply land and buildings cost total is 170,000. Out of this, land is 60,000, which is not depreciated as per the question. The remaining is 110,000, which is depreciated by 2%. So the answer will be 2,200 depreciation for land and buildings. In the next point, they are saying motor vehicles are depreciated at the rate of 25% per annum using reducing balance method. So that is very simple. I need to just apply the formula for reducing balance method. The formula for reducing balance method is cost minus accumulated depreciation multiplied by percentage. So the percentage here is 25%. I'll simply do cost, that is 30,000 plus 16,000, which is 46,000, minus accumulated depreciation, that is 10,000 in this case. So provisions for depreciation is accumulated depreciation. This one is your accumulated depreciation, and this is the cost of motor vehicles. And then you multiply this by 25%, and your answer will come out to be 9,000, because 36,000 multiplied by 25% is 9,000. In the next point, they are saying fixtures and fittings are depreciated at the rate of 10% per annum on cost using straight line method. So straight line method cost is 7,000, and your percentage here is 10%. So 7,000 into 10% is 700. So fixtures and fittings depreciation is 700 in this case. The last point here, point number 9, is saying trade receivables of 7,000 are irrecoverable. The provision for doubtful debts is to be maintained at 5% of the remaining trade receivables, which means that they have been making provision for doubtful debts in the past years. And if we look at the question carefully, provision for doubtful debts is the last value here in the balances, that is 900. So simply I need to calculate the new provision for doubtful debts. What are my trade receivables? My trade receivables are 35,000. Out of these, 7,000 cannot pay me because these are irrecoverable. They will not pay me. So my net trade receivables are 35,000 minus 7,000, which is 28,000. You multiply this by 25%. So 28, oh sorry, multiply this by 5%. So 28,000 multiplied by 5% will be how much? 28,000 multiplied by 5% should be 1,400. Yes, it is 1,400. Now what is happening here is that my old provision was 900 and my new provision is 1,400, which means there is an increase of 500, which I will record in the expenses section of the income statement, because increase in provision for doubtful debts is an expense, reduction in provision for doubtful debts is an income. If my provision for doubtful debts previously was 900 and now it was 500, then it was a reduction of 400. But in this case, previously my provision for doubtful debts was 900 and my new provision for doubtful debts was 1,400, which means there's an increase of 500, which I'll record in the expenses section of the income statement. So that's it for the adjustments. Once the adjustments are done, you guys just can move on to making the income statement, and your income statement will become very 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 simple if you have done the adjustments first, and then you just have to deal with very less of it. And then what is important is the format. The format is very very important. You should know where you should write what, and what value will be subtracted, what value will be added. You should know the logic of it. If you know the logic of it, it is always easy to remember. So what I'll do here is that I'll make the income statement. So let's make the income statement for this question, and this is right here, and you guys can see the format is already there. Honestly, I'm living a student's dream here, because all my students say to me, Miss, can you give the format in the test? And I say to them, you guys need to learn the format. You should know it as part of your memory. So okay, let's start making the income statement here. Revenue here is the revenue is the eighth value here, so it is 326,000. So I'll directly write here 326,000. And then I need to write sales returns. So sales returns here is return inwards. It's 10th value and it's 4,300. So I'll write here 4,300. So I need to subtract sales returns because sales returns is not part of revenue. Customers have returned goods to us, which means that is not counted as our revenue. So 326,000 minus 4,300 will give me 321,700. This is my net sales. Then less cost of sales, opening inventory. Okay, inventory here is the 20th value. I can look at the balances and tell you that it's a 20th value. So it is 30,000. So I'll directly write 30,000 here. And then I have to add purchases to this. So purchases here is the ninth value here. It's the ninth value. 135,000 plus 1950 is 136,950. So I'll write here 136,950. And then I need to add carriage inwards, which in this case is 2,700, which we also discussed as part of the adjustments here. So 2,700 will be added as carriage inwards here. So 2,700. And then when I add all these, so I should have other things as well, like like purchases, returns is also part of the cost of sales section. Similarly, drawings of goods is also part of the cost of sales section, but it is not in this particular case. It can be part of the cost of sales section in any other question, so you need to take care of that. It's also part of the format. Okay, closing inventory here is 35,550, so I need to subtract that. I've written here a less closing inventory 35,550. When I subtract that from 169 650, I will get 134,100. This is my cost of sales. So net sales minus cost of sales is again my gross profit. So 321,700 minus 134,100 is 187,600, which is my gross profit. So very simple. Then we move on to writing the incomes here. In this case, rent receivable is an income. So rent receivable, we did have an adjustment for rent receivable also, which we discussed earlier. So 14,500 plus 1,500. So I'll write here in my details 14,500. I need to tell the examiner that I am adding. Owing here, I'll write here 16,000. And then there is profit on disposal. So whenever they write here disposal account and they write here credit, that means it's a profit. So normally in the trial balance, whenever it's an income, they put it on the credit side of the trial balance. So even in the case of disposal, if they write credit, it's a profit. If they write debit, it's a loss. So in this case, it's a profit and it is $8,500. So I'll just directly write here $8,500. This will add up to 24,500, which is my income. And then when you add 187,600 plus 24,500 will give me 212,100, which is my profit after adding incomes here. Then I need to write all my expenses here, which I have already written. I'll just write the values here. Carriage outwards was 6,300. Total carriage was 9,000. Of this, 2,700 was carriage inwards. So 6,300 was carriage outwards. Wages and salaries. There is no adjustment on wages and salaries. We'll directly copy it. It's the 12th value here, 90,000. So I'll just write here 90,000. Then motor vehicle expenses. There is no adjustment on motor vehicle expenses. It's simply here 13th value 11,250. So I'll simply write here 11,250. Then we have insurance. There was an adjustment on insurance, which we also discussed. It was one of the points in the additional information. So insurance is 2,700 minus 200, which is 2,500, which I'll write in my income statement as 2,500. Insurance will be 2,500. So yes, that's my insurance. Then we have electricity and water, and there was an adjustment for electricity and water. Electricity water here is the 21st value, which is 6,050, and we added 750 as our owing here. So 6,050 plus 750 will give me 6,800, which I will record in electricity and water, 6,800. Then we have marketing expenses. There was no adjustment to marketing expenses here. It's the 22nd value marketing expenses, 17,300. So I'll write here 17,300. Then we have general expenses. There was no adjustment to general expenses. It's the 23rd value here, which is 14,000. I'll directly write 14,000 here. Then we have irrecoverable debts. Irrecoverable debts was part of the 9th point here in the additional information, which said it was 7,000. So I'll write here 7,000. And part of the 9th point, again, I calculated the provision for doubtful debts, and it was 1,400. The older provision for doubtful debts was 900. The new provision for doubtful debts was 1,400. So there is an increase of 500. So I'll write here 500. Then I have depreciations. So I calculated 3 depreciations. One was for buildings, that was 2,200. So I'll directly write here 2,200. And for depreciation for motor vehicles, I calculated it was 9,000, which I'll write in my expenses section of the income statement as 9,000. And fixtures and fittings was, the cost of it was 7,000, and 10% was the depreciation, and the method here was straight line. So 700 was my depreciation for fixtures and fittings. So that's it for all the expenses. I need to add them up very quickly. I'll just add them up. 6,300 plus 90,000 plus 11,250 plus 2,500 plus 6,800 plus 17,300 plus 14,000 plus 7,000 plus 500 plus 2,200 plus 9,000 plus 700 gives me 167,550. These are my total expenses. Now I need to subtract these from this value that I found out, 212. So 212, 100 minus 165, 167 550 gives me 44 550. This is my profit from operations. Now I need to subtract the interest expense here, and simply there is a 6% bank loan here. The 16th value here is 6% bank loan, and the bank loan was for 40,000. So 40,000 multiplied by 6% should be 2,400. And interestingly, we have paid the same interest as we were supposed to pay. So we incurred 2,400 as an interest expense, and we have actually paid 2,400. So I will subtract 2,400 from my profit from operations. This 2,400 will be subtracted from the from profit from operations, and then you get profit for the year. So profit for the year will be 42,150. This is my profit for the year. So this was very simple. Now we need to make the statement of financial position. So let's make the statement of financial position for the same sole trader. So what is important here to note is that you need to firstly record the non-current assets. So we had three non-current assets, and the cost of these three was 170,000 for land and buildings, motor vehicles was 30,000, and 7,000 was fixtures and fittings. So I need to record this in my cost column. So 170,000 for land and buildings, motor vehicles was for 30,000, plus there was 46, plus there was a 16,000 new motor vehicle that we had purchased. So this is going to be 46,000, and 7,000 was for fixtures and fittings. These are my costs for non-current assets. And then we need to record the provision for depreciation for non-current assets. So land and buildings, the provision for depreciation, that means accumulated depreciation at the start of the year was 18,600, and we charged depreciation of 2,200 this year. So accumulated depreciation at the end of the year will be 18,600 plus 2,200. 18,600 plus 2,200, which will come out to be 20,800, 20800, which I need to subtract from 170,000. So 170,000 minus 20,800. So that is going to give me 149,200 as my net book value. Similarly, the depreciation at the start of the year, the total depreciation at the start of the year for motor vehicles was 10,000, and I charged 9,000 for motor vehicles this year. So my total depreciation for motor vehicles is going to be 19,000, which I'm going to subtract from 46,000. So 46,000 minus 19,000 will give me 27,000 as my net book value for motor vehicles. Then we have fixtures and fittings. The cost is 7,000, and the accumulated depreciation at the start of the year was 1,400 already given, and then we charged 700 as our depreciation for fixtures and fittings. So 1,400 plus 700 will give me 2,100. So 7,000 minus 2,100 will give me 4,900 as my net book value. So when I add these three net book value, so 149,200, 149,200 plus 27,000 plus 4,900 will give me 181,100. This is my total non-current assets at the end of the year. So interesting thing you guys should know, you need to write cost in the column for cost. In the accumulated depreciation column, you need to look at the depreciation that we have in the trial balance, and you need to add the depreciation that we have charged this year. That will give us accumulated depreciation at the end of the year. Then cost minus accumulated depreciation is the formula for net book value, which you need to apply here. In the current asset section, okay, inventory is the least liquid current asset, and inventory is going to be closing inventory. How do I know that? Because 30th September is my date at which I am making my statement of financial position. So all the values in the statement of financial position will be as of 30th September. So 30th September 2019. So I'll simply write here inventory was 35,550 at the end of the year. That is part of additional information. It is point number 3. Inventory was valued at 35,550. Then we need to write trade receivables. So trade receivables in the list of balances was 35,000. Out of this, 7,000 were irrecoverable. So your net trade receivables was 28,000, and provision for doubtful debts, we calculated a provision for doubtful debts of 1,400 for the current year. And in the income statement, we had taken the change. In the statement of financial position, you always take what you have calculated for this year, which will be 1,400. So 28,000 minus 1,400 will give me how much? 28,000 minus 1,400 is going to give me 26,600. 28,000 minus 1,400 is going to give me, yes, 26,600. Okay, other receivables. Other receivables, I always, whenever in my online classes, I normally ask my students what is all included in other receivables. So other receivables are of two types. Other receivables means prepaid expenses, and the other is owing incomes. So prepaid expenses, because we have paid for future, so now we'll be receiving the service, so that is going to be my other receivables. In this case, insurance, we paid insurance for a year and 200 was prepaid in that case. So this is point number 5, because 800 we paid for a year, 3 months we did not use up, 9 months we used up for the current year. So 3 months, October, November and December, 200 was prepaid. So 200 is my prepaid expense in this case. And rent receivable 1,500 was due. Owing income means it's going to be your current asset. Why? Because you guys need to know the why of it, that owing income is my current asset because I have given the service and I haven't received the money. So I'm going to receive the money now. So this is going to be 1,500. So 200 plus 1,500 gives me 1,700, which is my other receivable in this case. Bank in this case was some value, and then we reduced it by 16,000. So 27,450 minus 16,000. 27,450 minus 16,000, because we have bought a motor vehicle paying by check, and the amount will be here 11,450, which I will record as my value for bank, 11,450. And then I'll add all these current assets of mine. So 35,550, 35,550 plus 26,600 plus 1,700 plus 11,450 is going to be my total current assets here, 75,300. And then when you add 75,300 with 181,100, this is going to be 256,400. This is my total assets. Now what I need to do is, then I need to make the capital and liabilities section. So you guys know this very well as well, that this whole thing, so I'm going to mark this for you, this whole thing is the total assets section. So statement of financial position is basically made on this basic accounting equation, that is assets is equal to capital plus liabilities. So assets here is current non-current assets and then current assets, and we have found the total for non-current assets and current assets. Now we need to make the capital section. So capital at the start of the year, I need to find it from my question here. So capital at the start of the year here is, in this question, capital at start is the 18th value here. Capital is 160,000. I'll simply write 160,000 in my statement of financial position. I'll write here 160,000 for capital. Then I will add profit for the year here. So profit for the year is 42,150. So I'll add here 42,150. Then I'll add these both. So this will add up to 202,150. So this will add up to 202,150. Then we have drawings. So drawings in this case is only cash drawings. It's part of the trial balance. It is the 19th value is drawings, 25,000, which I will subtract from here. We don't have goods drawings in this case, so I don't need to subtract goods drawings. So I'll write here simply 25,000. So 202,150 minus 25,000 will give me 177,150. This is my capital at end. Now I'm going to make the non-current liabilities and the current liabilities section. So non-current liabilities in this case was a $40,000 bank loan, which is $40,000. Yes, so we'll directly write 40,000 as our non-current liability. For a bank loan, I'll write here 40,000. Then I need to record my current liabilities. So in this case, trade payables were increasing. In this case, I added 1950 to my trade payables. So 36,550. So 36,550 plus 1950 is going to be 38,500. So I'll simply write here 38,500 in my second column, 38,500, which is my trade payables. So this was 36,550 plus 1950. And other payables, what are the other payables? So other payables will be uh, prepaid incomes and owing expenses. So owing expenses, in this case we had one owing expense, that was water. uh, that was $750 only one owing expense. We don't have any other owing expense here, so I'll simply write here 750 for water. That is my owing expense, 750. Now 38,500 plus 750 will give me 39,250. So 39,250. Now I need to add these three. So capital at end plus non-current liabilities plus current liabilities is going to give me my balancing figure, and I'm hoping it's going to balance. So it's 177 150 plus 40,000 plus 39,250, and yes, the magic happened. 256 400 is my balancing figure, and my statement of financial position is balancing, which means I've done everything correctly. Honestly, the balancing of the trial balance, the balancing of the statement of financial position is not something, it does not tell that everything that you have done is correct, but you need to follow the accounting principles and accounting concepts very correctly so that your statement of financial position balances. And if your statement of financial position, God forbid it, if it doesn't balance in the exam, don't worry about it. I mean, there might be one mistake and because of it the statement of financial position is not balancing, but then you can always score the maximum marks in your exams. And so that's it for this video. I'm hoping this helps you. Thank you so much for watching.